Welcome. If you're tuning in to our webinar today, we're just going to wait a couple of moments to get everyone logged on here before we dive in. Thank you for joining. We're really excited for this very timely webinar today. So we'll just be waiting a couple more moments. Thank you again to everyone who has made the time out of all of our very busy Januaries to be here. Appreciate it. All right, we are going to get started. So thank you again for tuning in. I'm Lily Taft. I am a member of the CFA San Francisco Society and also a part of the Young Leaders Council. And it is my absolute pleasure to welcome you to our update on the market and regulatory environment for both blockchain and cryptocurrency. We've got some wonderful speakers joining us today, Jennifer Murphy and Charles Kolstad. If you both wouldn't mind introducing yourself, Jen, maybe we can start with you, just a bit on your background. If you could introduce yourself to our audience.
Sure. I have spent my career in the asset management business, started out working with Bill Miller. Some of you may know Bill Miller at Legg Mason, and worked on the equity side, and that's where I did the CFA program there. Worked there for a long time, and went to business school somewhere in between there, and then eventually made my way to the fixed income side, working at Western Asset Management as the chief operating officer most recently. But now, as you know, Lily, I started my own firm to invest in digital assets, and I've been doing that for about 2.5 years now.
Wonderful. Thank you so much. And Charles?
I'm Charles Kolstad. Hi, everybody. I'm a partner at Withers Bergman. I'm a tax and corporate lawyer. I've been involved in the Bitcoin, digital asset, crypto space since Bitcoin was issued, because people said, Charles, what do I do from a tax perspective? How do I deal with all this stuff? And there, I founded the firm's digital asset practice group, and we now have about 135 lawyers around the world doing all sorts of stuff in this space.
Wonderful. Thank you so much. A couple of quick items before we get started for all of our listeners. You will obviously all be muted for the event, but we do encourage you to type any questions into the Q&A box. We will be monitoring these closely and try to get as many answered as possible, but this event will be recorded, so please feel free to share the replay afterwards. And without further ado, let's get started with a quick status on the Bitcoin ETF approval, which has been a bit of a circus the last couple of days, but it seems like we do have approval and that these ETFs should start trading in a matter of days. So Charles, I'd love to kick it off with you. Just talking about this new ETF in the context of estate planning, what do you think is going to come from this? What sort of challenges or opportunities does this ruling present in your specific line of work? And maybe it helps clients from a tax compliant or hurts them. Would love your perspective on this timely news.
Thank you. I think it will actually help, because if you hold directly Bitcoin, you've got issues about the wallet and the safety and being on the exchange, and who's going to be typically from an estate planning perspective, you set up a trust, you have to have a trustee. If you have a corporate trustee, because you're sending it out in a different state from where you live, most of them, particularly if they're national entities, they're not going to touch Bitcoin or other digital assets. So I think being able to get into Bitcoin, spot Bitcoin and the futures through ETFs and futures and options and so forth will actually make it easier because now the trustee is holding an ETF, the SEC has approved it. And so I think it will actually make it much easier and people won't lose it. You won't end up with, $10 million that you can't find because you can't remember the passphrase for your wallet. So I think it's a good step forward.
And Jen, from your perspective as an investment manager, beyond just custody and trust, how do you see this recent ruling sort of affecting the overall market? Or maybe you have some predictions for our audience that would be of interest.
Lily, I think what happened today is the biggest thing to happen in digital assets, in crypto, in blockchain since Bitcoin was invented. This is it. And you all were here. You're here while it's happening. So it's amazing. The reason I think it's so important is you might be familiar with the idea of an adoption curve. As you know, digital assets are technologies and they're networks. That's what makes them so interesting and powerful in terms of their ability to scale and to grow value. And the way that technologies are adopted through a society is a subject of a lot of study. And one idea is that happens through through phases. It begins with innovators who are sort of willing to, do things that no one else will do, and they're inventors and they're iconoclasts. And then it moves to early adopters. And these are people who are willing to take risks and to sort of want to be on the cutting edge. Then there's a chasm between that and everyone else, the sort of mainstream adoption. And that crossing the chasm is where many technologies go to die. So many technologies are sort of beloved by the innovators and early adopters, but no one else cares, So, so the question for crypto, I think, has been, can it cross that chasm? Can it be something? Many people challenge me with, I can't buy a cup of coffee with Bitcoin, things like that. And that, I think, really is the question of, can it cross the chasm? So in my view, what happens with this ETF is it crosses the chasm. I think that not only Bitcoin, but digital assets become something that mainstream investors are considering for investment portfolios. But also, I think, I know we'll probably touch on this later, but I think all of us will be using digital assets and blockchain rails for things in our everyday life without even really being aware of it. So that's why I think it's just an incredibly important day long term.
That's very exciting.
It makes life so much simpler for someone who wants to buy Bitcoin, invest in Bitcoin. They don't have to worry about wallets or exchanges. They do it just like they do any other security, and life is simple.
Charles, I was going to ask you, do you think from an estate planning perspective, is Bitcoin and other cryptocurrencies something that we can invest in? Obviously, now with this ruling, we can. But do you think it's something people should be investing in?
Well, everybody that I talk to, if you look at the assets that are out there in returns, Bitcoin was one of the best performing assets 2023 and did very well 2022. So for people who have enough money and all the rest of it, yeah, I mean, they should be in digital assets. Now, whether you get beyond Bitcoin and Ethereum, ETH, to all the other 9,500 and whatever tokens that are out there, that's a whole different issue. But, if you've got a large investable amount of money, yeah, you should have a piece of it. Maybe it's 1%, maybe it's 10%, depending upon your appetite for risk and all of that. But I think increasingly people will all want some form of exposure to crypto.
And if you are going to have exposure to crypto beyond just a slice of a Bitcoin ETF or a slice of a future Ethereum ETF, Jennifer, maybe from your firm's perspective, what's the best way to try and participate in this budding industry's growth?
There's a great book by Carlotta Perez. It's called Technological Innovations and Financial Capital. In it, she describes ages, technological ages, mostly in the United States is her focus, but it's a global phenomenon. And she outlines five technological ages since the Industrial Revolution that have occurred in sort of her way of thinking about it. The most recent is the information age, which you're well familiar with. And as you know, we have about 120 years or so of good stock price data. And if you look at that data over that long period of time, a very small number of stocks actually drove the majority of stock returns over that time period. Most stocks returned less than the T-bill rate over the long term. I think what you'll find here is similar. I think you'll find that just as in the information age, two of the most early companies in the information age were Microsoft and Apple, and they continue to be dominant companies today and dominant value creators. I think we're entering a new information age with artificial intelligence, with genomics, and with crypto. And I think the most important thing, I'm getting to your question, Lily, is to do something, buy something. I think it's really important to have some exposure here. There are stocks that you can buy, stocks that have been actually have done better than Bitcoin over the past year or so, like Bitcoin mining stocks like Marathon and Riot Blockchain. These are Bitcoin miners. There's MicroStrategies, which is really just kind of a stealth Bitcoin ETF that may not be so valuable anymore because people can just buy an ETF directly now. Coinbase is a great way. There are ETFs of these stocks that you can buy that are a little broader. You can buy directly, as you said, Lily. You can open a Coinbase account on your phone and start investing directly. That's how I started buying Bitcoin. I bought it every day for like 200 days straight. That was my way of getting in when I first started buying. And there's a lot of venture capital activity. If that's something that's available in your portfolio allocation, that's another way to do it, to invest. But I agree with Charles. There's a lot of pitfalls out there. There's a pretty good learning curve still on things other than stocks and ETFs. And so that's probably a great place to start, or just start by buying Bitcoin through your Coinbase account.
Thank you, Jennifer. Super exciting to see where this all heads. Charles, I'd like to turn it to you and switch gears a little bit to talk taxes, since I know that's a big area of expertise for you. I think taxation is just a often misunderstood, complex area, and I'd love to learn just generally high level how you think about advising your clients in crypto taxes. What does that entail? Obviously, it's much more nuanced than, just looking at 1099s from a brokerage account.
Well, it's a great question. At one level, it's very simple. Crypto is property. You exchange crypto for something else. You exchange Bitcoin for ETH for AVAX for Polkadot. You buy some Shiba Inu, whatever. Every time you move from one crypto to the other, that's a taxable event. If you go on overstock.com or any place that accepts crypto to pay for things, that's a taxable event. So you buy a sofa for, a half a Bitcoin. It's an expensive sofa. That's a taxable event. So the theory is simple. Life gets more complicated in practice because many people have multiple wallets. And so when you move it from one wallet to the other, that's a non-taxable event. But then you have to keep track of your basis. And every time you exchange it, your basis changes. And if you just buy and hold a particular crypto, that's easy. It's when you are actively trading it that life gets complicated. And, I have clients that trade, 5,000 times a year. That's a real problem. And there's software out there to help keep track of all of that. But it there's a lot of issues there. And then you get into things like DeFi transactions and staking. I know there was a question about that came in from one of the participants about staking. And, there was a ruling that came out earlier this year. Before the ruling, people were taking the position that the rewards you got from staking weren't taxable till you disposed of it. The ruling makes it clear that's not the case. You pick up income when you receive the staking reward or when you have constructive ownership. And then that whatever that value is, so you have to keep track of it. And it's so the theory is good. One of the issues that people are going to face is every tax regulator in the world knows for certain that the only reason people engage in crypto transactions is tax avoidance. And what I tell people are the IRS, the tax authorities around the world, they may be slow, but they're not stupid. And there are still some people who think you can be anonymous in the blockchain space, and they're just wrong. Because the minute you have the ability to convert crypto into fiat, into dollars or pounds or euros or whatever, you're traceable. And within the IRS and the Treasury, there's a group of people who are specifically focused on taxes. And for those that are about to file their tax returns or file their 2022 tax returns, on the front page, on the first page of your 1040, just below name, rank, and serial number is the question: have you engaged in any crypto transactions? Yes or no? And if you say no, and it turns out that you have, they're going to say that you've engaged in fraud, and the IRS is not going to be happy. And the EU, the OECD, and the IRS have all said that they're going to exchange information globally about people who have crypto so that they can stop tax evasion. So if you think if you're thinking about not paying taxes on any crypto, think again. Don't do it. Pay your taxes.
I know there was a certain point that a lot of folks in the crypto blockchain world were speculating around, is crypto just going to be pushed offshore since US regulators were so non-crypto friendly? It seems like that may be changing with this recent ETF ruling, but obviously taxes are part of living in the United States. And I'm curious, Jennifer, if you think that the tax implications associated with crypto are going to have a negative effect on the industry here in America, if you think it's going to be a more flourishing industry outside the US. Would love to hear your thoughts on that.
Well, I think the rest of the world is hoping that it gets pushed outside of the United States. We have in the United States the best capital markets in the world. So I think that is what's so attractive about not pushing crypto offshore. So I think there's lots of technology talent outside of the United States. And I think, a good part of that talent is focused on crypto. So we don't need the United States for that, though there's certainly a lot of talent here. Crypto projects, Bitcoin being a good example, can scale globally without any rulings or regulations in the United States. So it's not needed for these projects to grow and succeed for the United States to have good laws and regulations and tax policies. So I think, Lily, the biggest thing is that I think what everyone in the United States wants is clarity. We will almost accept anything with clarity, So I think that's the biggest obstacle for people really making big commitments, big capital commitments, big talent commitments. People really betting their careers on this being, an area of strong growth in the United States is that lack of clarity. So I think there's several presidential candidates who are, aware of crypto and Bitcoin and are talking about it. Unfortunately, I don't think it's a priority for the two leading candidates of the major parties, but it is for sort of the others, the sort of runner-ups.
Mhm.
So I think it's getting a lot more visibility, but I think Charles and I, based on our past conversations, I think we agree we're not likely to see a lot. I don't want to speak for you, Charles, but I think we talked about this. I think neither of us is very hopeful that we'll get a lot of action from Congress on it in the near term, and that probably is what's needed. So I think I'm most concerned about just this ongoing uncertainty that is a real obstacle to people, as Charles described. So I think that is the thing I would most like to see us address, and I think is the danger of not addressing it is crypto continues to flourish in Europe, in the United Arab Emirates, in Singapore, in China and Asia, et cetera.
So
Interesting.
it's, as Jennifer said, there's uncertainty in the US, and I think it's highly unlikely that that uncertainty will be resolved in any near-term future.
Mhm.
And I have lots of clients and people that I talk to who are in the US and they don't want to be in the US anymore. And although the SEC approved the Bitcoin ETFs, I think it was last week, Chairman Gensler again came out, with a long list of things that he doesn't like about crypto. And they're going to continue challenging most crypto as being an unregistered security. You still have the XRP case. You've got, the Coinbase situation and all of that. So, if you look back at the internet, the US won that battle. There are no equivalents of Microsoft or Apple or Google in Europe. The concern I have is if there's no resolution of the uncertainty, then Chairman Gensler may continue to attack crypto, forcing it offshore. And once it's offshore, it's not clear to me that it'll come back if 3 or 4 years from now there is clarity.
Mm.
And all the countries that Jennifer mentioned, everybody outside the US is actively trying to encourage people, companies to be in their jurisdiction and to do things. So, we've got lots of really smart people here. We've got opportunities, but I think the window is starting to close on people staying in the US.
Fair enough. I'm curious if you both seem not to expect clarity, but is there any regulatory changes that you expect? It seems like, Jennifer, you anticipated the ETF approval. Is there any other changes from a regulatory standpoint that either of you anticipate in the next few years, despite maybe not a sea change in clarity?
Well, I'll start. I know Charles has thoughts as well. I think that there have been a lot of bills introduced in Congress, but none I think that are serious right now. But I think the courts are sort of giving us some clarity, and I think that some are giving Gary Gensler and the SEC credit for through this whole sort of grinding, painful process of bringing clarity. So, and the courts have played a role in that. So I think there are, like the Coinbase case that Charles mentioned, there's a hearing coming up next week on with Coinbase and the SEC, who is suing Coinbase. And it's really, this lawsuit is all about technical matters of what is about exchanges and about securities. And so I think we probably won't get they won't dismiss the case next week, but by the judge's questions and comments, we can sort of glean where they're headed potentially. I think that could give us some clarity. I think if the SEC prevails, I think that could establish, the SEC is saying they have the regulations in place and people need to live with them. If the Coinbase prevails, then I think the SEC will have to do some rulemaking, which they've said they don't need to do. So this grind sort of continues. So I think in the meantime, I think we may get some approval, for example, for an ETH ETF. I think that's possible based on the same criteria and basis for the Bitcoin ETF. So I'm afraid it's not, there's no sort of easy fix on the horizon, unfortunately. I don't know,
Yeah,
Charles, what do you think?
Yeah, and I mean, the concern I have is if the SEC is successful with Coinbase, their attack on Coinbase, or there's a definitive ruling in a court that crypto other than Bitcoin and ETH are in fact securities. The minute there's the ruling that other crypto is a security, everything stops, because now Coinbase, Kraken, Uniswap, all those people, they can't trade those crypto anymore because they're not a registered 34 Act exchange. And so now, and this is the reason why I've sort of been advising people to think about what happens if that occurs. What do? You've got, Shiba Inu that you paid $100,000 for. You can't trade it on the U.S. exchange, and many of the foreign exchanges, because you're U.S., won't take you on. And the ones that will take you on, it's not clear to me you actually want to be on. So, and that's another reason why I think people are starting to move offshore. A lot of the venture capital funds that are being set up now are being set up outside the US in anticipation of those things. So it's, yes, on the one hand, the SEC giveth with the Bitcoin ETF, but they haven't stopped saying everything other than Bitcoin and ETH are an unregistered security.
Right.
So, it's very problematic, and Congress is not going to do anything in any sort of meaningful time frame to try and resolve this. They are, there's two parties and they're fighting over everything. So they've got, in their minds, bigger fish to fry than dealing with good regulations in the crypto space.
Right. That makes a lot of sense. Although it feels like they probably will have to do something beyond just regulating trading of cryptocurrencies, given how much blockchain is touching our everyday lives. And Jennifer, I'd love to hear a little bit from you about how blockchain might be touching us. I think you've talked a lot about how there's so many areas that we don't even realize, but we are actually interacting with this technology. So I'd love to learn more about that, and maybe you could share some examples.
Sure. Yeah, I think you'll find increasingly customer rewards programs. Like if you're a Starbucks rewards customer, the underlying infrastructure for that program is blockchain, and your rewards are NFTs, and that's whole. But I think Starbucks correctly thought nobody cares about that. They just want our rewards and our experiences, and so they focus on that. So I think you'll see more of that. Other companies are also using blockchain infrastructure for sort of customer relationships. It gives them a lot more tools to give to use with customers. So you probably heard Mark Cuban talk about, I guess he just sold a majority stake or a big stake in the Mavericks, I guess, right? But the Mavericks issue their tickets. They have a partnership with Ticketmaster, and when you have a Mavericks ticket, it comes in the form of an NFT as well. And that NFT, they have a little trading venue, and if you just link, you don't have to know anything about crypto or wallets. all you do is link your Ticketmaster account to your Mavericks ticket, and you can trade it or offer it for sale, those sorts of things. And it's very small right now, but that's how these things start, right? So I think that's sort of an interesting, innovation that Mark Cuban's pursuing. But there are other things like you may have heard Solana introduced a phone. It was kind of a dud until the phone came loaded with it comes preloaded with wallets and a crypto wallet, so you don't need to do all that yourself. It's sort of already set up for you, which is very helpful. But it also came with a meme coin called Bonk. And when Bonk started trading, the value of the bonk that was sort of preloaded as kind of a nice little gift for the Solana phone buyers ended up being worth more than the Solana phone. So people were buying it to arbitrage the difference. It's since come down a bit, but I think that sort of the idea of integrating these in a phone, I think that's definitely coming for all phones. But also there's a sort of decentralized network called Helium, and Helium offers a cellular phone plan for $20 a month. And it's primarily provided through this decentralized network of cellular towers that Helium, oversees. Probably maybe the last thing I'll mention that I think people are going to get excited about or interested in anyway is some of the problems that AI creates. I mean, you may have seen, I saw this morning a kind of a political satire of a politician that was a video of this politician talking about a topic that was not them. They did not have this talk. They did not say these things. It was an AI created video, and it was labeled that way, but it would, the casual browser may not have picked that up.
Mm.
Polygon, which is a crypto infrastructure protocol, they have a new product with a news network called Verify, and it's meant to provide kind of documentation and immutable documentation of when something was created and all of the changes made it to it. So just verification of media. So when something was created and what's been done to it since then when you're viewing it, or can check that if you want to. I think those kinds of tools are going to be increasingly important to all of us, but we probably won't associate them with blockchains. It won't be important to us that they're provided in that particular way, I think. Does that give you a sense?
Yes, I had no idea about the phones. It's fascinating. Thank you for sharing that.
Well, and there's a bunch of other areas. There's a whole focus on what they call tokenization of real world assets.
Mhm.
In Europe and in Asia, people have issued bonds and securities and stock using a blockchain. They've sold gold using a blockchain. I was in Australia recently. Their most significant, valuable winemaker, Grange, has used the blockchain to track every bottle of their expensive wine, which can be $3,000-$4,000 a bottle, to avoid counterfeiting.
Wow.
Maersk, the world's largest shipping company, for a while was using the blockchain to track every one of their shipping containers. And to Jennifer's point, we'll know that the blockchain has become successful when nobody actually talks about it. When it's just like the internet. You used to
Right.
talk about this browser and that browser and what user, and nobody talks about that anymore. It's just you go on your phone, you go on your laptop, your iPad, and it just works. And you don't care about the underlying technology. And at the moment, it's too complicated for most people, and you have to talk about it. So we'll
Right.
be successful when nobody uses the word blockchain anymore, and it's there.
Right. Are there any use cases specific to your industry that you're excited about or seeing innovated right now? I mean, it seems like proof of existence, it could be useful in estate planning. So I'm curious if you know of any exciting projects in that space.
I'm not aware of anybody yet using blockchain as part of an estate plan.
Fair enough.
It's where we see it is people are talking about, blockchain for ownership of real estate, for example. And,
Mm,
10 years from now, when you buy your house, you'll get an NFT that says you own it.
right.
And what's interesting from a regulatory perspective is, the SEC is sort of against Main Street investors and blockchain and crypto. But,
Mm-hmm.
JP Morgan, Fidelity, lots of people who are at the institutional level are using private blockchains to settle securities transactions, to deal with collateral issues. And, nobody these days wants to take counterparty risk. And so, I was at a conference recently, and the main focus of this conference was how to use blockchain technology to have instantaneous settlement so nobody has to take counterparty risk.
Very interesting. I think the thing that comes to mind with all of these exciting innovations is, how are entrepreneurs potentially going to monetize this? Since ultimately, as an investor, that's what we care about. And Jen, I'm curious in your fund how you think about profitability of these projects. How you generally value cryptocurrencies. Are there more nuanced methods, or maybe you're using traditional metrics that we learn about in the CFA program? Maybe you could expand a little bit on that.
Yeah, we wrote one of my partners, Alex Bodie, and I wrote an article for the CFA Enterprising blog about a year ago on how to use some of the CFA, sort of what both of us are CFAs, how to use those approaches for valuing digital assets. And in it, we Alex had created a model, a discounted cash flow model for Ethereum name service, which is a
Mm-hmm.
Ethereum application. And that is the most requested. In the article, we say, hey, let us, contact us if you want the model. That people still follow up with us today to see the model. And it would be well familiar to anyone on this call. It's it's pretty straightforward model. But in the article, we sort of talk about what we do, because all of us come from kind of traditional training and backgrounds. And so we do things like we take a sector-based approach. There weren't great sector approaches when we started, so we created our own, but now there are. So one sort of straightforward thing you could do that would be familiar is for other asset classes is just to diversify across sectors in what you own. And that there are differences in how sectors behave, their correlations. And so when you do sort of risk analysis, there are definitely benefits to doing that. On the valuation side, there are valuation approaches there for more mature tokens like Ethereum name service or Ethereum itself, where they have real economics. There's real revenue, there are
Right.
costs and profits. So you can create a model, you can make assumptions and projections and take, a similar sort of approach as you might to an equity ownership in a company. And so that's comforting. A lot of people find that comforting. And that'll work for some, but there are many other tokens, and Bitcoin being one, where there aren't that sort of economics and revenues that are so readily ported over. So for something like that, there's an idea in network theory called Metcalfe's law. And what Metcalfe's law essentially says is that the value of a network grows exponentially as more nodes join the network. So if you take something like Facebook, for example, now Meta, and you just, if you do a regression analysis or you sort of analyze how much of Meta's growth in the value of its stock is explained by Metcalfe's law, it's over 90%. So in essence,
Wow.
you really just could have known that. It's all about adoption, basically. And the same, so you can take a similar approach with Bitcoin. It requires a lot of assumptions. It's not easy, but it's a thought process. So you can take that Metcalfe's law thought process for something like Bitcoin or other tokens like it. And then there's another approach that we used in my old job at Legg Mason Capital Management called the Gordon Growth Model. But the idea of it is similar to thinking about a token or a stock, as sort of the existing business and its growth potential, sort of a call option idea on the growth potential. And so for things that don't have a lot of current economics, but have the prospect of that at some point in the future, you can take that sort of approach to it, and we have done that. And then there's clearly things that are just more pure liquid venture capital where it's really just about what's the total addressable market and what are the prospects for sort of getting to product market fit, et cetera. So those are, all familiar, but they do require a little bit of adjustment, I would say, for digital assets. But those tools are and sort of the Bain investment principles that we learned in the CFA, they all make sense in digital assets.
Wow, very exciting. Had no idea about the Metcalfe law. That's really interesting. I'd love to start turning it over to some of our audience questions now. We've got a couple to address here, so keep asking in the Q&A box for all of our listeners. First question we got for Charles, potentially, is do you see clients take worthless stock deductions if the client lost money on a crypto project? For example, this would be a crypto project that raised money and then closed doors during 2023.
So the theory sounds good. The IRS actually issued some guidance about trying to claim a worthless deduction when the crypto drops in value. And basically, if you have crypto and you hold it, you're not going to get an abandonment loss or a worthless loss because it could go back up. So if you want to sort of crystallize the loss, the good thing is the wash sale rules don't apply to crypto yet. So you can sell the crypto on a Tuesday, buy it back on a Wednesday or a Thursday, and crystallize the loss and have it that way. And that's a much more, it's a less risky way of getting the loss than just holding on to it and saying, oh, I've lost it. And, this is where the people who had money tied up in FTX had a problem because, at one point you could buy FTX claims for 6 cents on the dollar. Now they're trading at 60 or 70 cents on the dollar. And that just supports the government's position that you shouldn't have claimed a worthless stock loss or an abandonment loss or anything because it went up in value. And so, you couldn't prove that it was actually worthless. So, sell early, sell often.
I think that actually addresses the next question, which was about engaging in tax loss harvesting. It sounds like your recommendation would be absolutely, you can tax loss harvest as much as you want in crypto, especially since those wash sale rules don't apply. So that's great. The next question is about defunct crypto projects. Do you see clients taking stock loss or worthless stock deductions in 2023 for bankrupt crypto brokers? Example, FTX, Celsius. I guess you already answered that question as well. Is there any other nuance to those questions that you'd like to add, Jennifer, or Charles? Maybe you have more color on those topics.
Jennifer, your thoughts?
Charles probably knows this too. I'm sure he does. Is there are people who are actively buying those claims, the FTX claims and other claims. So an easy way to crystallize what your loss was is sell your claim and get some value for it. Not because those things are not total losses, as Charles mentioned. So I think there are people who are actively buying up those claims currently. And I think there are brokers who will, as a courtesy, assist you in trading, at a very, at a cent or whatever, to help you crystallize that loss.
Makes sense.
Yeah, it's an interesting situation because, if you crystallize the loss in 2024, you can't carry that loss back. So, we have clients who made lots of money on paper in 2022 when token prices were high, NFTs were selling at ridiculous numbers, but they didn't convert their tokens into fiat to pay the taxes. So now we have clients where their token is worth, maybe it was worth $50 when they did their transaction in 2022 or 23. Now it's worth, 50 cents, but it's on FTX. They can't get access to it.
Right.
So they have a gain. They can trigger a loss, but they can't use it. And they can't access the tokens on FTX to generate some cash to help pay the taxes. So it's sort of like a double whammy for them.
Interesting. Well, we're getting to the end of our webinar, but I do have a couple of other questions personally that I would like to ask both of you. And it's kind of just related to the general direction of crypto markets. It sounds like both of you are optimistic. We've have a lot of innovation, some great strides happening in the regulatory space. Although it's clear after the current cycle that macroeconomics do affect crypto markets the same way that they affected the stock market, it seems like we're in for a good bull market in my perspective going forward. Are you thinking the same thing for crypto? Are there any warning signals that you're looking at that might signal recession and bearish sentiment in crypto markets? Any thoughts on that, Jen or Charles? I'll leave it open to both of you to answer.
There's a great John Templeton quote about bull markets, that they're sort of born in pessimism, grow in skepticism, mature in optimism, and die in euphoria. And he was talking about equity markets primarily, but I think it's a pretty good template for all bull markets, and certainly in crypto. So I think we're already in a bull market in crypto, and I think we're well into the optimism phase now. But there's a lot of debate about that, and many people believe we're not yet in the bull market. I think they're looking for new highs. But I think that's optimism and euphoria stages. So I think we're already there, Lily. There are certainly warning signs. They're not flashing bright red yet, but things like the crypto, there's a sentiment index for crypto, just as there is for the stock market. Both of those are in extreme greed right now. So sentiment is certainly at an extreme. So that's something to keep an eye on. But having said that, I think if you look out a little bit further, crypto is very sensitive to liquidity, global liquidity. And in the Fed's most recent comments, there's probably people on this call that know more about this than me, but it sounds like the Fed governors are starting to at least thinking about maybe starting to taper QT. That would, anything that sort of improves the liquidity environment is likely to make its way to risk assets, especially crypto. So I think that could become a tailwind. So I think markets are even starting to, think about that now. So I think markets, climb a wall of worry. So there's always plenty to worry about. I think in the medium term, we're still pretty bullish, but we're sort of due for a break here, I think.
Yeah, as I look out 5 years from now and think about what the crypto space will look like, I think it's going to be quite different than we have it today. I think you're going to have payment related things. You'll have stable coins, you'll have Bitcoin, you'll have mechanisms to pay for things and all of that. You'll have, as Jennifer referenced, loyalty programs, whether it's Nike or Starbucks or Hermes or whoever. Musicians, actors, all those, you'll have a lot of that. You'll have in-game tokens. Gaming is now bigger than the movie industry. So you're going to have lots of tokens related to games and things. You're going to have tokens related to real world assets. But a lot of the tokens, and I think last time there was like 10,000 tokens out there. I think a lot of those tokens 5 years from now are not going to be around. And that actually has some interesting implications for exchanges because, we have a lot of crypto exchanges around the world because there's lots of tokens to trade and lots of people wanting to do that. If you see a shrinking in the number of tokens that are listed and available, as that number shrinks, the number of exchanges that you need, I think, and exchanges who can make money off that, I think you will see shrink. So I think, 5 years from now, a lot of the value that people have in some of these meme coins, I think they're just going to be gone.
Interesting. It also makes me wonder, if crypto markets are generally growing alongside a growing economy, they are still one of the most volatile asset classes out there. Plus, on top of everything, you've got people buying and selling to take advantage of no wash sale rules. So that's probably just adding to the level of volatility. As crypto markets mature and blockchain touches our lives in more and more ways, do we think volatility is likely to stay at the current elevated levels, or maybe normalize slightly with maturity? Love any perspective on that.
Yeah, right now, the least volatile assets and digital assets among the large ones are Bitcoin and Ethereum, which I think to the average person seem pretty darn volatile. And they are, they're 5 times as volatile as sort of your typical NASDAQ, stock. So there is a lot of volatility. And these are the least volatile ones. The other, as you go sort of in the tail of assets, they're much more volatile. I think that Bitcoin and Ethereum, they have a big head start in their maturity. And I think you'll see that volatility. It's been coming down, as you alluded to, Lily, and I think that will continue. But in part because the inputs, if you think about stock volatility, prices can be volatile, but the value of companies doesn't change that much, right, day to day, even though prices go up and down day to day. And the inputs to those, the reason that value doesn't change that much is the inputs don't change wildly day to day of the inputs to how you determine value, how you think about value. I think for many crypto assets, still they look much more like options valuations than stock valuations, where they're highly sensitive to the inputs. So I think you could still see a lot of volatility for that reason, where if people become, as they continue to update their estimates of what those inputs are, it can have very big impacts on what the estimated values are. So I think that's going to go on for a while. And so I think you'll still see high volatility, which I hope will mean, also big opportunity for returns. So I'm kind of on the one hand this, on the other hand that, Lily, I guess, to your question.
Interesting. Charles, any thoughts on that before we wrap up?
My clients fall into 2 categories.
Mm-hmm.
People who say, I will never sell. I'm buying and I'm holding forever. And people who trade 5,000 times a year. And they have very different views on whether they like volatility or not. And, I think as with the Bitcoin ETFs, possibly some ETH ETFs and so forth, spot, I think that will actually help over time reduce some of the volatility because people will be in it as investors with a long-term hold view. You'll still have former Wall Street stock traders who say, oh, this is lovely. I can take all the stuff I know about, trading, futures and options on stocks and move it over here and make lots of money. You'll still have some of those people, but I think as there's more adoption, as Jennifer said, I think that will help reduce some of the volatility.
Well, we'll see where this adoption curve lands in the next few years. I'm personally excited to see some of the initiatives around peer-to-peer payments. I know there might be capabilities to send assets via things like iMessage or other consumer communication channels. I think that was a big update that has come out recently. So we'll have to get together and do this again. This was very fun and interesting. I learned a lot. So thank you both for making the time out of your very busy days. I don't see any other questions in the question box, but thank you everyone for joining this afternoon. Thank you so much, Jennifer and Charles, and hope to do this again. Thanks so much, everyone.
5 years from now.
Yeah, we'll check in then.
Thanks, Lily. Bye, Charles.
Thanks,
Thank
Lily.
you.
Thanks, Jennifer. Cheers, everybody. Bye-bye.
Cheers.